Hi there, and welcome to Rent Prep for Landlords. I'm Andrew Schultz, Community Manager here at Rent Prep. I'm also a licensed real estate broker with over 14 years of experience in the property management and rental property industries. On today's episode, we're going to help you save on your taxes. We have some tips and tricks to help you reduce your overall tax burden, as well as some deductions that you may not have thought about in the past. We've got a lot to cover today, so let's get to it. Before we jump too deep into things, I do need to mention that I am a real estate broker and I am not an accountant. I'm also not an attorney, and any information that you take out of this video should be run through your financial professionals as well as your legal professionals before you make any decisions on anything that you heard here. This video does not constitute legal or financial advice. All that being said, if you're going to hire legal or professional services, you should know that those are deductible. Many people don't realize that they can utilize professional services to help them extend the abilities of themselves or their company, and they get a tax benefit from doing so. So if you're paying an attorney or if you're paying an accountant, those services are deductible on your taxes. But this doesn't just stop at accountants and lawyers. Professional services extends to a whole host of other professions such as IT, financial planning, architects, engineers, and so much more. If you join a professional organization such as a local property investors group, that membership would also be tax deductible in a situation like this. Going along with legal and professional services, any sort of licensing that you're required to complete or carry in order for you to run your business is also going to be tax deductible. So for instance, if your city requires you to have a rental property license or an occupancy permit, those would be items that would be tax deductible. This would also include other types of professional licenses. So for instance, I'm a real estate broker, and for tax purposes, I'm a real estate professional. My licensing fees are tax deductible. So when I renew my license every 2 years, I can claim those expenses on my taxes. I also mentioned that permits are deductible on your taxes. This includes work permits, as well as permits for anything that you happen to be doing at your property. So if you're, for instance, swapping out some windows or replacing a roof and your town requires you to pull a permit in order to do that work, that cost would be deductible on your taxes. In addition, if there are inspection fees that go along with closing out that permit, those are also going to wind up being deductible on your taxes. Since we're talking about permits and inspections, we should also probably talk about repairs and capital improvements. Those sorts of things kind of go hand in hand. Generally speaking, repairs made to your investment property will be tax deductible. In addition to that, if you purchase supplies to use at the property, that would also be considered tax deductible. So for instance, if you were to buy cleaning supplies or rock salt, if you live in a cold weather climate, or bathroom supplies, all of those things would be considered tax deductible. So if you operate in the short-term rental world, for instance, if you leave out things like snacks and toiletries and whatever other consumables in the rental property for your short-term tenants to consume, those items would be considered tax deductible. That also goes for any sort of supplies such as laundry detergents and things of that nature, any sort of linens, any sort of towels. All of those things would be considered deductible as part of your taxes. Now, switching from repairs to capital improvements are also going to be tax deductible. However, depending on the project, you may be deducting it over the course of several years versus just in the year that that expense occurred. Capital improvements are meant to increase the overall value of the home in the long term and are generally meant to be permanent additions to the property. So something like adding a garage, for instance, would be a capital improvement. Many times, in addition to the income tax savings that you wind up with from the capital improvement projects, there's also going to be a sales tax exemption as well. So for instance, here in the state of New York, anything that would be considered a capital improvement is also sales tax exempt. So you get to stack a little bit of savings in instances such as that. If you're outspending money to place ads or have signs or banners printed, or if you're spending money to run open houses or anything else associated with the advertising and marketing of your property, all of that stuff would be considered tax deductible. Advertising and marketing costs are very, very common when you're searching for a new tenant to occupy your rental unit, and keeping tabs on those costs means that you'll be able to deduct them come tax time. It's also worth tracking your leads so that you understand what sources of advertising are producing the best results for you. But that's another topic for another day entirely. There are a lot of different types of insurance out there that you may have that would be associated with your rental property or your rental business. For starters, you're probably going to have property insurance. I think everybody really understands why property insurance is important and why you should have that. But there are several other insurance products that are out there that you may or may not have or may not want to consider. So typically insurance costs are going to be tax deductible as well. You may not need all of these insurances. You may not want any of these insurances beyond just the property insurance that your bank is probably requiring you to carry if you're in a financed situation. But I did come up with a list of other insurance that I've seen being offered to landlords just out there in the public market. A lot of these are things that you may want to consider. Some of them might be a little bit overkill depending on where you're at in your investing career. If you're early on, obviously, some of these won't apply, but as you grow, you'll start to see that the expenses from insurance can really add up. So off the top of my head, you may want to have an umbrella policy for your rental properties, an umbrella liability policy, especially if you own your rental properties in your own name. You may need general liability insurance to cover your operations as you grow. I carry an errors and omissions insurance policy for our real estate brokerage to cover our property management operations. And once you get to a point where you start hiring staff and employees, you're going to need things like workers' compensation, unemployment insurance, disability insurance, and all of the things that go along with that. There are also insurances out there for very specific niche things, such as fair housing violations, or cybersecurity threats, or terrorism coverage, and the list goes on and on and on. I think that everybody has their own level of risk that they're willing to accept in situations like this. And my recommendation would be to make sure that you have a well-written insurance policy and that you understand that insurance policy and how it can help reduce your risk of loss, as well as provide a tax deduction for you on a yearly basis. Now, one of my favorite categories for tax deductions is education. I make it a point to try to learn something new every single day, and I love the fact that my education can be tax deductible. If I decide to take a certification class or a seminar or I buy a course online, all of those would be considered tax deductible. There are a ton of great conferences out there that are worth attending as well, not just for the education, but also for the networking benefits. And honestly, sometimes the networking benefits are even more valuable than the education, which is really saying something because a lot of these conferences have excellent speakers with great education panels put together on them. But being able to interact with other industry professionals is a very, very good reason to consider attending a conference or a seminar. But what if that seminar is in, say, Orlando and you're in Buffalo? Your travel for work-related purposes is typically going to be tax deductible. In addition, your accommodations and your food while you're traveling are typically going to be deductible as well. There are a lot of ins and outs when it comes to deducting travel and accommodations and food, and we're not going to have time to delve into all of that here. This is an area where I would recommend doing some research and talking to your tax professional. There is a reason that so many doctors attend conferences in tropical climates. Talk to your tax professional and start enjoying those benefits alongside them. Property taxes are typically deductible. However, there is a limit to the amount that you're able to deduct. The current limit for the 2023 tax year is $10,000 total in combined tax deductions, or $5,000 if you're married filing jointly. This is definitely one to run by your tax pro, especially if you have multiple properties with high tax bills, to see if there's some options out there to help you save on your property taxes, or your income taxes, just by deducting some of your property taxes. If you pay for any of the utilities at your rental property, those utilities would be considered tax deductible in most instances. I actually did find when doing research for this video that there are service charges associated with water bills, sewer bills, and trash bills that are non-deductible from your taxes. So be sure that you double check those bills as you're entering them into your accounting system and make sure that you're only writing off the portion of that bill that you're technically allowed to under the current IRS regulations. Utilities can be a major expense at a property if they're included with the rent, so this is potentially a big deduction that you don't want to overlook. If you engaged a real estate agent or broker or a property manager at any time during the year, any commissions or property management fees that you paid to that professional are considered tax deductible. That's something that I always make sure to mention to clients during the first phone call whenever we start talking to someone about property management. Tenant placement and property management, they cost money, but you do get to deduct that expense from your taxes, which helps to offset it somewhat. I actually came across one fee that you cannot deduct, which kind of surprised me as I was doing my research for this video, and that's HOA dues. Property management fees can be deducted, but HOA dues cannot. So if you have a home in an HOA, those HOA fees are not considered deductible. And in my opinion, that's just one more of the multitude of reasons not to own a property in an HOA. I've never been a big fan of properties that are in an HOA because I don't think it gives investors full control over their asset. And now you can't even deduct part of it because it's in an HOA. So that's something to consider when you're out there shopping for properties. And last but certainly not least is the home office deduction. Every single accountant's hair just stood up on the back of their neck. My accountant tells me that the home office deduction is one of the most heavily criticized deductions in an audit. So be careful with this one. I strongly recommend heading over to the IRS website and searching for how small business owners can deduct their home office from their taxes. That exact line. How small business owners can deduct their home office from their taxes. It's going to bring up an article from January of 2022. And that article has a ton of great information on what you can and can't deduct and so much more. The one thing I do want to mention to entice you to do the research on this is that this is going to open you up to some more tax deductions on your personal residence based on the square footage of your home office inside that residence. So it's definitely worth checking that out. So there you have it. We certainly didn't cover every tax deduction out there, but we definitely covered a whole bunch of them. Did we miss one of your favorite tax deductions? Drop us a comment down below and let us know what your favorite tax deduction is and whether or not we caught it in this episode. Don't forget to like and subscribe. I'm Andrew Schultz with OwnBuffalo.com for RentPrep.com, and I'll talk to you soon.